Alphabet's shares dropped almost 10% this week because their AI chatbot gave an alleged wrong answer. And I think this whole thing is crazy, but it's just part of the wacky world of investing in finance. And so let's cover it. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Let's dive right into this one. And so you can see it here. Alphabet's shares are down almost 10%. They just cratered after that chatbot made that mistake. But does this create an opportunity for some people that are looking to enter into a position in Alphabet at a cheaper or sub $100 per share price? And so before we go into the valuation, I just wanted to look at the article that talked about this. And so they said that the shares dove after their AI chatbot flubbed an answer in the ad. And so effectively, the company lost approximately $100 billion in market value on Wednesday this past week after its chatbot shared inaccurate information in a promotional video, and the company event, or essentially the company event, failed to dazzle, and it also fed worries that the Google's parent is losing ground to rival Microsoft Corp. And so that's fine, but as I'm going to argue later in this video, exactly what ground are they losing? Like, how much of the search space are they going to lose to Microsoft? And can we be honest here? They may have flubbed an answer, but like, how much time does Alphabet really need to sort of fix this issue? I just don't see a world where they fall significantly behind on chatbots, because I don't think chatbots are, radical or exceptional technology. This stuff has been built out for a long time. And what ChatGPT does, although it is exceptional and it is, groundbreaking in terms of, the general public being aware of it and being able to use it, I just don't think Alphabet is going to take that much longer to sort of like figure this out. Yeah, they made a mistake, whatever. But then the other part of it is the monetization part of it. How exactly is Microsoft going to monetize from this better or more so than Alphabet is going to? Because, they'll integrate it into Bing like they've said that they're going to do. They're going to integrate it into their Azure platform like they said that they're going to do. Alphabet is going to do the same, but I still rather use a Google search, the Google browser, all of that stuff, than switch over to using Bing. Like, will Bing go from 0% to 0.1% market share? Like, I just do not see this happening to the point where 10% or close to 10% of the company's market value got wiped out over a 5-day trading period. It doesn't make sense to me at all. But guys, I want to know what you think. Feel free to disagree with my opinion, but let me know why in the comments below. Is there something that I'm missing out on? Is there something that I need to learn about this space further? Now, the employees actually rushed to criticize the company's CEO, and they said that effectively the effort was rushed, botched, and comically short-sighted. And so, what does this mean over the longer term? I just think that more of their CEO's time and the best employees that are focused on this is just going to transpire now that this has happened. I think it's got everyone's attention now. And, in an environment where layoffs have already happened, you can absolutely bet that Alphabet is going to be tooling up or making sure that they have the right people to address this problem. And I absolutely bet, I would take a huge bet that this chatbot Bard or Baird, however they describe it or they term it, is going to be just as good. It may not necessarily be better, but it just needs to be good enough to ChatGPT, and I think that they nail that by the end of this year. I think this will just be a funny situation that happened by the end of 2023. I don't think that Alphabet is significantly behind here. And here's a point from an analyst. They said that while Google has been the leader in AI innovation over the last several years, they seem to have fallen asleep on implementing this technology into their search product, said Gil Lura, senior software analyst at DA Davidson. And, part of it is, the thing that sort of gives me a little bit of reprieve is that they have been a leader in the AI innovation space. It doesn't necessarily matter to me that somebody else got to the finish line or seemingly has gotten to the finish line faster. I just think that they'll get there too. Look, Amazon had many years head start on Microsoft as it related to the cloud product, but Microsoft caught up really well. And it doesn't make sense to me, once again, that Google, who's been focused on this space, won't be able to catch up. I would say that they get this done before the end of the year. And so, Alphabet did post a short GIF video of Bard in action via Twitter, promising it would help simplify complex topics, but it instead delivered an inaccurate answer. So this is what this whole hubbub is about. And so now on to the main point of this video, which is how does this hubbub, this flub, this whatever you want to call it, how does it actually impact the valuation? And let's go through that. And so in order to determine how this impacts the valuation, the first thing you got to do is you got to get Tay on the phone. You need that tracker. Okay, Batman and Robin, let's go into the tracker and see how Alphabet's valuation builds out. And so for those of you who are not familiar with the tracker, this is the main page to the tracker. And you can see Goog, which is obviously trades on the NASDAQ, which is the Alphabet stock. This is the current share price as of the last close. This is where I'm personally valuing it. I'm not telling you to buy or sell based on this valuation. I'm just giving you my opinion of what I think the company's worth. And so I believe that it's trading at approximately 70 times or 70% of its intrinsic value, or trading at a 17 times earnings to next year's expected earnings. So I think it looks cheap, and I think that this sell-off might have been overdone in this environment. And so once again, for you guys who are unfamiliar with this, you can actually click into this once you get access to the tracker, and this will bring up the model on how I build this valuation out. So let's go into that model. And so I'm going to click into this section right here. And so here is the Alphabet model. And so, the question I ask, and this is an open question. I'm really not trying to make a point, but I just don't see it. And so the question I'm asking is, what exactly is ChatGPT going to hit in terms of the product segments as we forecast out Alphabet? And so, technically it could, obviously the most direct area that it could hit is Google search, and the indirect area that it could potentially hit is Google Cloud. I don't think ChatGPT is going to hit YouTube. I don't think it's going to hit, their hardware business. I definitely don't think that it's going to hit their network member properties business either. And so, maybe a little bit, but I don't think so. And so, I'm already growing the mature Google search and other segment at just 5% a year. That's how I'm getting to that 70% of intrinsic value valuation anyway. So this is a very pessimistic model, because look, in 2023, I'm growing revenues, top line revenues at just 4.8%, and I'm never growing it greater than 10% throughout the life of the company. This is a mature company, and so what's the light for this company? Where are they going to get most of their growth? They're going to get it from Google Cloud. That's the fast growing segment, and then hopefully they can bring YouTube back up to speed. I think this is a little bit slower, the 10 and the 7.5%. I think more growth goes into YouTube, especially in the connected TV space, which they're investing heavily in. Remember, they just got that contract with the NFL, and they're going to continue to double down into that space. That's a fast and exciting space in the ads market. And so once again, I'm only growing the mature business at 5%. I fail to see the threat. And once again, as I said previously, maybe Bing goes from 0% market share to 0.1% market share. Now, obviously, those aren't the market shares that they actually have. But the point that I'm making is that I don't see people switching over to Google search from Bing sustainably over the long term. Look, if Google fails to deliver on a good chatbot over the medium to long term, then I could see people switching over to Bing, but I just don't see it happening right now. Some of you guys might. And so enjoy Bing. And so when it comes to the valuation for Alphabet, notice that I'm using a low terminal multiple of just 17.5 times earnings. A lot of people use a higher terminal multiple than I am. And so I'm valuing the company once again at $135 per share. Now, this is not, once again, not a recommendation for you to buy or sell the security. This is just my interpretation of what I think the company's worth. And you guys let me know what you think. And so, the company's starting to get pretty cheap. And so the next step that I'm going to do is I'm going to start looking at the cash secured put opportunities for this, because I like to buy companies at lower than 70%. Alphabet might be one of those exceptions where I might add it at around 70%, or, let's see what the cash secured put opportunities provide us in terms of yield for this, because I might be able to set a purchase price closer to 50% of its intrinsic value, and heads, I get a good yield, and tails, I get exercise on the option, and I just end up buying Alphabet at a much lower price, because I don't know which direction the shares are going to go. However, if you want to better understand understanding of how I look at cash secured puts with a real life example, you can actually get access to this video right here where I cover cash secured puts.